So I'm going to do another video today, and this video is going to contain the trade that I took today from an hourly to an M5 perspective on the NASDAQ. And I wanted to do this video because I got a lot of questions from the tweet that I put out online for Twitter. And a lot of people were kind of confused because they didn't see like a daily key level or a weekly key level. And I wanted to do this to kind of explain to you guys my thought process into going into today and how I kind of framed that setup without using a daily gap or a weekly gap to frame my trade off of. Now, you guys already usually know this. All my trades that are like the cleanest possible setups, they're always derived from a higher time frame perspective. They're always derived from a higher time frame key level that has SMT, a daily or a weekly gap with SMT divergence. Now, going into this new week, it is CPI on Wednesday, so I went into today like honestly like treading with caution, you could say that. But I want to do this. This is going to be completely raw cut, no edits, nothing crazy. I just wanted to explain the logic behind the trade so you guys can understand what made me go into the markets today with that mindset. So we have a daily chart on the S&P and the NASDAQ, and I'm going to look at the weekly as well. As you can see, how have we been trading? How has price been trending in the market? Price has been just driving higher. And honestly, we haven't had a run of a previous weekly low since the 14th of April, pretty much 2 weeks into the start of quarter two. So it's been difficult to really like get into a higher time frame trade and hold a swing position moving towards the all-time highs, which is where I think that we're going to be going. So we have nothing to reference right now on the weekly. And we go to the daily chart. There is still nothing to reference on the daily chart here. So I was pretty dry going into this trading day. Now, what made me come to the conclusion of my long position and what was potential for the day? I know you guys probably also had a bearish bias from the daily perspective, and I think I could tell you why, because of the SMT that was set into the previous daily highs, and then also Friday's open being flat, being a potential draw on liquidity. Now, I had a call with my students the night before creating the plan. And that's what you guys should always be doing when you're going into a trading day. Create a trading plan the day prior so that you are mentally checked in and wired to know what to do before you start trading in that AM session. Now, if we go to the 4-hour chart and we're looking to see how price was structured going into the day. Now, I'm going to replay price and we're going to look at what is going on coming into that session. So we replay, and how are we currently trending right now? We had a 4-hour bullish fair value gap that was tagged on the NASDAQ, as you can see here during the Asia session. The same 4-hour gap that was tagged on the NASDAQ was failed to tag on the S&P 500. So we had a higher low there. We have a lower low resting right here. That is my SMT inside of a higher time frame key level, being the 4-hour chart. And what I said to my group the night before, I wanted to see if we were going to go look for lower prices. The only way for me to do that is to violate bullish PD arrays, aka closing off this 4-hour bullish gap. And as you can see, we did not do that. What did we do? We created SMT at that key level, and then price expanded higher. So seeing this and this reaction that we created during Asia session led me to the inclination to believe, what is going to happen? Are we going to continue in New York, or are we going to reverse and neglect this SMT? So I leaned more bullish into the day. I'm not going to automatically just flip bearish just because there's an SMT at a previous daily high. That's definitely not enough when the higher time frame, the daily and the weekly, is so strong and gravitating so aggressively towards all-time highs. It's just stupid to do that. You're kind of like flipping a coin almost and just like making a gamble, saying that price is automatically bearish from one small piece of confluence. Now, since we had this 4-hour SMT in a gap, I went down to the 1-hour to see, is there any imbalances that we could utilize as a reference point for a trade opportunity? So we go down to the 1-hour chart, and the draw on liquidity for the day and the daily objective that I wanted to label off was simply the 4-hour external range high that was listed here at 21,874. Now, if we're looking closely and getting into the time of when equities open is happening, I'm going to mark off a vertical line at the 9 o'clock candle. And this is where it comes into the fact of what is there to do next and how are we going to be able to capitalize on a trade execution. You might have had to zoom in a little tight for this, but if you notice on the S&P 500, there is an hourly bullish fair value gap resting right here that gets tagged. And if we look at the correlated lows, this low here to this low here, we ran it, lower low. If we look at this low here to this low here, don't run it. SMT divergence at or inside of the tag of a fair value gap. We don't need a tag on both assets. We need a tag just on one. So seeing that happen at a key level, at a key time, primarily equities open, once I saw this, I'm like, all right, let's see as to what's going on the align lower time frame, the 5-minute chart for the NASDAQ to see if we could frame a trade to these highs and then these highs resting above here. Now, this is the beauty about having everything automated for you because the indicator was actually able to pull this up. So if we go to the 5-minute chart and we look at what is going on for the NASDAQ, we could see here, I'm going to remove all of my drawings and I'm going to replay price right here. So this is when everything checked into place. As you can see, we have that SMT set in at the lows here. We have the down close candle resting right here that runs short-term low, runs short-term low. The next candle comes down, taps us in here, and then what do we do next? We look for a 1 to 2 risk reward with your stop loss at the resting low, or you could do your stop loss at the low that got ran. That's what I personally did, and then I targeted these highs for a 1 to 2, or you could leave it to the 2 standard deviations projection at 21,837. So as you can see, what happens next with price, boom, we reach that objective point. And what happened here, and this is the beauty thing about price, the 930 equities open was here. We had an accumulation here. We had a manipulation down lower into what? Into a key level that created SMT. We had displacement after that violating bullish PD raise, closing off this 5-minute gap, creating a change in save delivery, then executing long and going higher in regards to what we were reaching for on our 4-hour internal to external range move, which was met and smooth ran. We tapped this 4-hour gap. We created SMT inside of that gap, and then that led us to see a New York continuation to take out this resting high after we set in the low during Asia session. Very nice, simplistic, and obvious view of price delivery for the people that were confused prior as to how I derived this trade and what made me do this. This is exactly why. There was not enough data for me to look for anything on the weekly or the daily. So I resorted to a 1-hour to a 4-hour perspective, and the setup was clean. So the setup was clean. I'm going to take it. If the trend of the higher time frame was in a consolidation, like the weekly or the daily was in a consolidation market, I wouldn't have done this. But since price has been obviously trending higher, I am going to take the trade and just rely on bullish price action. It's the easiest way for me to put this here. And as you can see, it was a clear and obvious state of a market maker buy model to just simply run from an internal to an external range drawn liquidity. Now, I hope this was easy for you guys to understand. I hope you guys learned something from this. And I also want you guys to know that there is going to be a major update on the indicator that is coming out soon. And I hope you guys stay tuned for that. I'll give updates too as well. But it printed, and every single week, every single day, the model is replicated. It is a copy and paste strategy, and I hope you guys are learning, and I hope you are eating nice in regards to how I've portrayed everything for the forever model. But be safe, guys. CPI week, take it slow, and I will talk to you guys next time for the next upload. Deuces, everyone.